So before you learn how to pass a prop firm challenge, you need to find out why 90% of traders actually do fail prop firm challenges so you can be the exception. So this video is going to be a two-part series. The first video, which is this video, we'll be talking on why most traders fail prop firm challenges, and the part two, which I will be releasing next week, would actually be how to then pass the prop firm challenges. So more or less in this video, I'll be highlighting the problems, and in the next video, I'll be highlighting typical solutions to these problems. So firstly, why 90% of traders actually do fail prop firm challenges. If you do not know what a prop firm challenge, you should definitely watch my other video on what is a prop firm, and if you are yet to decide on what prop firm you should use or you should work with, you should also watch my other video on what is the best prop trading firm. So that being said, this topic will be divided into two, right? So why traders fail are actually two major reasons. One are the external reasons, and two are the internal reasons why traders fail prop firm challenges. So the external reasons are usually reasons caused by the prop firm rules and by the prop firm restrictions themselves, which traders must adhere to, and some of these things actually eventually make traders lose the challenge eventually. And the second are the internal reasons, the reasons between you, yourself, and you. I mean, between you and yourself, why exactly, what are the psychological reasons, the emotional reasons, why exactly you would, or rather why exactly traders do fail prop firm challenges. So let's talk about the external reasons, right? Um, let's put it this way. Okay? You've chosen that prop firm. It is the best prop firm out there. You've checked all their rules, everything makes sense. And then you get in, but at a point you find yourself under a lot of pressure and you start wondering, how am I going to get this done? So you realize most of these prop firms actually have similar rules, but with those similar rules, you then realize also that you are more or less facing the same challenge across all prop firms. And number one challenge would be the trading day rules. That is the 30 calendar days that most prop firms allow you on their evaluation phase one or on their challenge phase one. Truth is, you are the best trader alive. You are very good. Your strategy works. However, one thing we realize is, depending on your strategy will not always work in every market situation or condition, except if you are that trader who has a strategy for every market condition, a trending market, ranging market, whatsoever market face reversal, you have a strategy for that. If you are that trader, then that's fine. But if you are a more conservative trader and you actually have your own signature trades that you like to focus on, then it's very possible that at the end of the first week of the challenge, you haven't even placed one trade. And then you are down 2 weeks and you still haven't placed any trade. Or let's even say you've placed only one trade and you realize before you know it, 15 calendar days are passed. Immediately you realize, you start feeling that pressure. I have just 30 calendar days. I have less than 10 days to go. I have less than 5 days to go. And at a point, you might just go like, okay, fine, let me just go all out, and since the days are almost up and I haven't really done anything substantial. So these 30 calendar days are actually, or rather is actually, a major rule that makes so many traders feel pressured and then eventually fail their prop firm challenges. The next reason would be the drawdown rule. So many traders are used to taking losses. However, when it comes to drawdown, it's a little bit different. So what does drawdown mean? Drawdown means you don't necessarily have to close the trade in loss. You just have to have that trade running in loss even before it closes. So even if it eventually closes and you make 100% profit, so far it was in drawdown, it's a loss. So for many traders, for most prop firms, let's start with the prop firms. So for most prop firms, the drawdown rule is 5% maximum daily. and then 12% or 10% maximum overall. And let's say you take your first trade and you are down 1%, you take your second trade, you are down 2%. Now, the truth is, on your own personal account, you can actually be down 15% in the first week when you started the account. But you don't feel that pressure to make it back. And before you know it, even before the end of that month, you might eventually close in maybe a profit of 10% from a drawdown of 15%. However, with these prop firms, the restriction is not is much more tougher. Number one, you know you can't go less than 5% per day, and overall you can't go less than 10%. A lot of traders feel the pressure of this drawdown and eventually then start misbehaving. And truth be told, I've been there. Truth be told, when you are down, say 5%, 6% on a prop firm account, on the challenge or whatever, it's usually very difficult to come back from that kind of loss because of all the psychology, all the emotions that are running through your head at that point. And eventually what you have is, for so many traders, at a point when you are down, say 7%, 6%, 8%, and the calendar days are also almost up, at a point you might just find yourself going, you know what, I'm going all out. If I pass, I pass. If I lose, I lose. And you just go ahead. And this market always knows how to reward traders who like to break the rules. So this is another thing that you very much need to understand and have a proper plan to scale through the 30 calendar days and the drawdown rule. And lastly, in the external rules or the external reasons why traders fail prop firm challenges, I'll be talking about high leverage. So most prop firms out there offer leverage of 1:100, and a prop firm like the Funded Trader actually targets more aggressive traders and offer 1:200. Now the truth is, for a large account, you don't need that much leverage, but so many traders don't even know about that. You have a leverage of 1:100 on a 100k account. I mean, do you really need to use up most of that leverage? You should be very much conservative. Number one, you understand that the drawdown rule is pretty much tight. You have a 30-day calendar rule and several other rules like that to abide to. And then because you have a higher leverage, so what that higher leverage does is it allows you to trade and stack as much positions as you can, which really is not good for your account, because at a point in time, you might probably not even calculate your drawdown properly. But because that account will allow you to trade even more than your drawdown limit, should in case it goes to loss, not should in case it closes in loss, but should in case it goes to loss, you find out that so many traders end up failing their prop firm challenges because they did not calculate this properly and because they were overly allowed to more or less do and undo because of the high leverage. So you definitely need to be careful. Do not misuse the leverage on your prop firm account. Yes, so now let's talk about the internal reasons, the reasons why so many traders do fail, not from the prop firm perspective now, but from your own perspective as an individual, as a trader. So let me paint this scenario, right? You've been trading for 2 years. You have this holy grail strategy. You are the best at what you do. You've used this strategy to grow your account from $1 to $100 million. I mean, this strategy just cannot fail. You are so good. You have a 90% win ratio, and you know all of that, right? And because of that, you then see the prop firm, and you're like, this is chicken. I can easily pass this with just a snap of a finger. But then you get in on a prop firm, forgetting it is not your account, forgetting the restrictions are more, and then because of the amount of money on the table, you then have high expectations. Your expectations are all over the roof, and in your head you're already calculating, okay, fine, there's 5 days minimum trading days. I can pass this challenge in 2 weeks. By the 3rd week, I already have 200k I'm trading with. By the end of 15, 30 days, I can withdraw 20k if I meet 10k, if I meet the 10% profit rule, and by the time I withdraw 20k, I can do this, I can do that, I can do that, and before you know it, I can even scale up my challenge to 400k and the likes. Trader, calm down. The truth is, so many traders go in, get these prop firms with a lot of high expectations, and because of that you put yourself on overdrive and you're trying to do everything so fast, you're trying to rush it up because you feel you are so good. Truth is, you need to take it one step at a time, one step at a time. Lower your expectations and scale up. I think it's much better that way. Lower your expectations and scale up. So high expectations is one major reason why so many traders do fail these prop firm challenges. And the advice will be simply to, pace yourself, okay? Pace yourself. But not to worry, in next week's video, I'm going to be talking about the solutions, what you can do to actually tackle all of these problems. So the next internal reason is not following your plan. You already have a trading plan that works for you. Your trading plan inculcates your strategy, the timing, but because of the pressure you are facing from the 30-day calendar rule, the maximum drawdown rule, and all those things, you eventually find yourself drifting away from your plan. And another thing is, you've been trading less than $5,000 accounts before now. You've been trading $500, $100, $2,000, but now you have a $200,000 account on your hand. Immediately you feel like you can do so much with it, and before you know it, you stop following your plan. Your plan was probably you shouldn't use a stop loss of maybe more than 5-10 pips, but because you feel, okay, this is 200 pips, I can use as much as 50 pips, and before you know it, you've diversified from your plan, you've diverted a lot from your plan, and you're already losing way much more than you bargained for. But at the beginning it will look small because it's a large account, but eventually you accumulate those losses and you end up failing. So make sure you stick to your plan. I posted a video on my Telegram channel, and that was, I think, 2 days ago. So if you're not a member of my Telegram channel, you definitely want to join that channel. By the way, this month of July, I will be teaching how to pass a prop firm, my strategy that I use in passing prop firms, completely free. So if you're interested in that, make sure to join my channel. The link is just in the description box below this video. So I posted a video, and one of the things I spoke about in that video is the same thing I'm talking about now. Follow your plan, and because this money is large, you shouldn't see the account, the prop firm account, in terms of dollars, in terms of what you can buy with it, in terms of what you can achieve with it. You should see it in terms of figures. So I said, whether I'm trading $1 million account, or I'm trading $100 account, or I'm trading a $10 million account, it is all figures. If my risk is 1%, that is what I will do. I will keep following my plan. The trader that can follow his plan is the trader that will eventually pass the prop firm challenge and eventually become a funded trader. So not following your plan is one reason why so many traders fail prop firm challenges, because they get overwhelmed when they see large capital. And another thing is ego. Ego is that guy in your head that keeps inspiring you and keeps ministering to you that you cannot be wrong. You are not wrong last week. When it was your personal account, you are right most of the time. Now that it's a prop firm account, you cannot be wrong. Shift stop loss. Do not play stop loss. Enter another trade. Add to a losing trade. Those things your ego keeps telling you, keeps ministering to you. Guys, make sure you fight your ego. I wouldn't dwell more on that. Most of us already understand what ego is. So guys, most especially, we realize most forex traders, I think most forex traders are actually guys, and the natural guy, the natural man has his ego. Make sure your ego does not control you in this market. And then another internal factor is trying to impress. You find out that so many of us traders are on trading groups, and on these trading groups you want to post your sniper entry. You want to post so everybody can hail you that you are the best trader. In fact, there was a time in my life when I found out I was on this group and everybody was always trying to impress. And I found out at a point I was more interested in posting good trades than actually making money. And it was detrimental to my account until I had to sit myself down and see what exactly is your priority. Is your priority to impress other traders so they can see you as a good trader, or is your priority to make money? So please do not fall into that pit hole. Make sure you are not trying to impress. The best trade does not mean the best amount of money. You just have to have that priority, have that focus on the money and not trying to impress. You want to impress traders, so you want to pass your prop firm in 2 days, and so you can post the results so everybody will look at you as the best trader alive. Guys, in reality, no one really cares. those people who actually make you feel so great when you do those things, deep down, are they also trying to make money, or are they more interested in you making money or you making progress? So guys, please understand your priority. Do not be out there trying to impress with your prop firm account. I mean, I've seen situations where prop firm account literally changes people's lives. I mean, it's literally takes someone who is more or less a pauper into someone who is now wealthy. So guys, this is not the time to start trying to impress. Trying to impress, who exactly are you trying to impress? Come on. And then another thing is not using stop loss. So for prop firms like the myforexfunds, they actually allow you to trade without stop loss. Guys, this is detrimental to your success as a prop firm trader. You should make sure under any circumstance you use your stop loss, because when you master the art of trading without stop loss, it is easier to then fail that drawdown rule, and then you eventually fail your prop firm challenge. So make sure you use a stop loss. The fact that you use stop loss today, price hits your stop loss, then move, doesn't mean you shouldn't do it tomorrow, and doesn't mean price won't hit your stop loss. But eventually what you realize is the stop loss will save your account in the long haul. And you should also focus on the process and not the results. So many traders end up focusing on results. So many traders are looking at, okay, I need to make that 8%, I need to make that 10%, and forgetting the process, your trading plan that can actually get you there. So guys, make sure you are not doing this. So many traders out there actually focus on the profits for the prop firm, and many traders even want to post the profits online so everybody can see that they are making money. But guys, eventually, if you are not managing this trade properly, the process behind the trade. So I tell my mentees, right, I tell them, listen, the reason behind the trade is more important than the trade itself. So I think you should also look to follow this principle. And the last point I'll be making is lack of patience. So many traders have 30 calendar days to meet their prop firm targets. Some have 60 days during the verification phase. But because you are so much in a hurry, you want to do everything in one day. Guys, lack of patience is one major reason traders fail. So if you find yourself doing any of these things, relax, try and work on it, and most especially look out for the next video. I'll be posting this next week on how exactly you can bypass these things and actually pass a prop firm challenge. So I'll be listing out some tips whereby you can easily adapt to add to your trading plan and find yourself easily passing the prop firm challenges. So understand that some of these rules are actually set to protect your accounts, but if you don't take proper caution, you find out that these rules are actually the rules that will end up making you fail and eventually lose that prop firm challenge. And guys, it's actually possible to lose a lot of money following or trying to pass prop firm challenges. So till next week, bye for now.